Global oil prices plunged below $100 a barrel, while Asian stock markets soared after the US and Iran agreed to a two-week ceasefire that includes the opening of the Strait of Hormuz. Hello and welcome to Wednesday's edition of Press Perspective for April 8th here in Seoul. I'm Min Sun-hee. Markets across the world were quick to respond to news of the ceasefire between the US and Iran on the condition that Iran coordinates the safe passage of all vessels through the Strait of Hormuz. For more on this, I have Associate Professor Yu Jong-min from Hongik University here in the studio. Professor Yu, it's a pleasure to have you here.
Thank you.
I also have Lee Ji-hoon with Reuters in the studio with us. Ji-hoon, it's been a while. Welcome back.
Thank you for having me again.
We shall start with you, Ji-hoon. Let's begin with the response from the local bourse and the local currency to news of the two-week halt in hostilities between Mr. Trump and, of course, Iran.
Yeah, President Trump has threatened that Iran will have to reopen the Strait of Hormuz or it will face devastating attacks. But then this morning, just less than 2 hours before his deadline, President Trump said that the United States and Iran reached an agreement to a two-week ceasefire. They provided a relief to global financial markets today. And in South Korea, the Kospi rose more than 6%, with the sharp gains triggering a sidecar trading curve during the session. The won currency also strengthened sharply, with the dollar-won exchange rate falling nearly 2% to come off the 1,500 mark to 1,470 level. Having said that, today's rally came after increased volatility over the past month. In March, the Kospi fell 19%, which was the biggest drop since the global financial crisis in 2008, almost confirming that the market was in a bearish trend. In March, the won also weakened more than 5%, with the dollar-won exchange rate hitting its highest level in 17 years by rising above 1,530. The bond market also tumbled last month, with the benchmark 10-year yield hitting the highest level since November 2023. Because of the volatility, South Korea's foreign exchange reserves dropped by nearly $4 billion last month, which was the biggest since April last year, because authorities were selling dollars to curb losses in the won currency. And financial authorities said today that they spent 2.4 trillion won out of their market stabilizing program to stabilize the bond market, and it was also the biggest spending since 2022. Today, analysts said it was a relief that there was a ceasefire agreement, but it is still too early to say. Uncertainty has been completely resolved, particularly around the Strait of Hormuz. So it is better to take a cautious approach because uncertainty could heighten again depending on the development around the situation.
Right, indeed. Professor Yu, I wonder, how do you respond to this latest development with regard to the conflict in the Middle East?
I can say this kind of situation is already pretty much expected in the market, actually. Someone might say that this is also one of the taco. Trump is always chickens out. I can say again chickens out. Or some might argue that I heard the news that China also had played a very significant role in the negotiation process because Iran is the only sources of the crude oil from the side of China. So once the ceasing the fire is made by the United Nations and the Iranian government, then China is the one of the party that can benefit from that side. So, and that's one thing. And also, I think that U.S. people, U.S. citizens who is living in the United States, they cannot really tolerate this kind of a spike of crude oil or gasoline prices because most of their living lives cost is heavily depending on the gas prices. And if this kind of situation lasts more than a month or 2 months, maybe political backgrounds of the like a Republican Party maybe heavily damaged by that. So that kind of situation is already reflected on the futures market, like interest rate and exchange rate, and also the crude oil prices. The futures prices has been steadily declining the recent a week ago. So I think it is already this kind of good news is already reflected on the market again.
Right, I see. In the meantime, Ji-hoon, what do you suppose has been the impact of the unrest in the Middle East on South Korea's exports and imports?
Yeah, South Korea is often considered a bellwether for global trade because it is the first country to report trade figures every month. And last month's data was particularly meaningful because it was the first data to show the impact of the Middle East crisis on global trade. Having said that, data showed last week South Korea's exports rose 48% in March, which was the fastest rise in nearly 4 decades, and faster than 45% forecast in our survey. That was thanks to strong demand for semiconductors, which rose 150%, led by the global boom in AI investment. The chip boom was also evident in Samsung Electronics' earnings released yesterday, which showed operating profit rising to record high of 58 trillion won. That was higher than market expectation of 41 trillion won and more than 8-fold increase from 7 trillion won last year. However, other than the semiconductor sector, there were signs that the Middle East conflict was weighing on global demand. For example, shipments to the Middle East dropped 49% in March because there were supply disruptions in the Strait of Hormuz. And auto exports rose only 2% because of the supply disruptions as well as high oil prices. According to Hyundai Motor, the Middle East crisis is disrupting its shipments not only to the Middle East but also to Africa and Europe because those shipments transit through the Middle East. When it comes to imports, they also rose in March at the fastest pace since September 2022. Even as import volume declined on supply disruptions because of high oil prices. And last week, monthly PMI survey also showed export orders increased at the slowest pace in 4 months in March because of uncertainty over the Middle East situation, which suggests that export growth could weaken going forward.
And against this backdrop, Professor Yu, could you remind us again about the significance of energy supplies, of course, for the South Korean economy?
Yeah. So as June explained, so Korea, the country itself is heavily depending on the export. We can call it as an export economy, and we are heavily depending on the trade with the many neighboring countries. So, and because of that, if the crude oil prices increases, that actually incurs the cost-push inflation. And in cost-push inflation, we can call it as a stagflation. Stagflation is something that the government cannot really feel very hard to deal with, because whenever we have a government sometimes government wants to spend the money and budgeting plan or the interest rate lowering, that kind of things doesn't really work in the stagflation situation, because it will more accelerate the price increase overall. So in this case, Korea economy right now is and also the cost push increase can increase the worsening the trade balance of the Korea economy as well, and the increase the price of the final will increase the prices of intermediate goods, and that intermediate goods price will pushes up the prices of the made in Korea products, and that will worsening the competitiveness of the industry as well. So Korea right now is I can say is a really vulnerable situation because we are heavily depending on the trade and also energy intensive industries, etc. So I think the stable supply of the crude oil is it's not an optional things for us, but it's still, I can say it's preconditions for prospering economy.
Right. And with regard to the current oil disruption, there are quite a number of pundits who have taken to comparing the current situation to the oil crisis of the 1970s. What do you suppose are the similarities and differences with the situation then and now?
Well, at the time, there was no countries that can go back to Stone Ages, maybe. At that time, I can say that the major difference was that United States was not one of the participants of the war. And at the time of the first oil shock, there was a four times Arab-Israel war at the time, and then Middle East countries has Israel also invaded Egypt and other Middle East countries, and Middle East countries also attacked Israel. And because of that, at the time, the England and France and some European countries has helped, and Western world has helped Israel. And because of that, the Middle East countries has had the embargo the oil supply at the time, and that was the sort of historical background of the first oil shock. And second oil shock was like a war between the Iran and Iraq. And also, there was a revolution from the Iranian government, and the Iranian government some radical Muslim government took the office, and so they actually decreased the oil supply and by nationalizing the oil industry itself. So I can say at the time right now, so United States is the oil exporting countries. But in 1970s, United States was the sort of the net importer of the crude oil. That was the most major difference. But we can say that Israel was one of the common the reasons why that this kind of oil shock was happened.
And speaking of supplies, Ji-hoon, OPEC Plus members, they've reportedly agreed to raise their output quotas in the month of May. Could you tell us a bit more about this particular decision?
Yeah, recently OPEC Plus agreed to raise oil output quotas in May by 206,000 barrels per day as oil price surged on the Middle East crisis. However, it is seen to be largely an agreement just on paper, because most producers will not be able to raise production due to the conflict. And the amount is also seen small because it is just 2% of the supply disrupted by the closure of the Strait of Hormuz. According to OPEC Plus, however, it still signals that it is ready to raise output once the Strait of Hormuz is reopened. And this decision comes after a series of government efforts as well as international efforts to respond to high oil prices. In March, the member countries of the IEA, the International Energy Agency, also agreed to release strategic oil reserves of over record 400 million barrels, and that includes South Korea. And last week, the UK also said about 40 countries were discussing joint action to reopen the Strait of Hormuz, although this meeting did not conclude with any specific measures. And each country is also making various efforts to respond to high oil prices, not to mention South Korea, which has already introduced nationwide fuel price caps for the first time in nearly 3 decades, and an extra budget to provide financial support to consumers as well as companies. So this is the latest in a series of government actions as well as internationally coordinated efforts to respond to high oil prices.
Right, indeed. And speaking about South Korea, Ji-hoon, the Bank of Korea is scheduled to share its monetary policy stance this week. What are we expecting?
So this Friday, the Bank of Korea will hold its next monetary policy meeting, which will be a big event because it will be the first since the Iran war broke out in late February and the last for the current governor, Lee Ji-hoon. According to our survey, the Bank of Korea is expected to hold interest rates steady at 2.5%, but the focus will be on the central bank's assessment of the Middle East crisis. Since the war broke out, the Bank of Korea has said risks are increasing both on inflation as well as growth. But analysts say it will be difficult for the Bank of Korea to give clear signs at the meeting on Friday on future monetary policy because uncertainty is very high, and it will be and also because it is the last policy meeting for the current governor. Still, analysts are already starting to pencil in some rate hikes for this year because of high inflation risks from high oil prices. When it comes to inflation, data showed last week that consumer prices rose 2.2% last month, which was weaker than 2.4% forecast by our survey, but that was because of nationwide fuel price caps introduced last month. And the Bank of Korea said inflation will be higher in April and going forward because oil prices are still rising sharply. And economists are also saying inflation forecasts will inevitably be higher this year, with our survey saying inflation forecast for this year will likely be at 2.4%, compared with 2.1% seen by the Bank of Korea before the war broke out. And because of this, out of 30 economists in our survey, 3 economists said interest rates will be raised to 2.75% by the end of this year. And one expected interest rates to go even higher to 3% by the end of the year due to high inflation risk, although this is still a minority view, with most economists saying the interest rates will be held steady at 2.5% throughout this year.
Right. Professor Yu, with regard to energy supplies, despite the challenges faced by its Asian neighbors, China, according to the New York Times, appears to be navigating this current energy situation with a bit of more legroom. What are your takeaways, keeping in mind, of course, South Korea's need to build energy supply resilience?
Yes. So, as Ji-hoon has mentioned, so it's just opening the Hormuz Strait is not it doesn't really guarantee the like a normalize of this kind of situation. So because whenever we bring the crude oil, we need to pass through the Middle East and Singapore and Asia. It almost takes 8 weeks. So 8 weeks is really a long time, and we also already depleted our oil accumulated in our storage. So whenever we need to refill this kind of oils, that also takes a lot of time. So, and also, furthermore, the infrastructure of a refinery system in Middle East is already has damaged by the attack of the United States or Israel or our countries as well. So, in a short run, so I think the South Korea, to avoid this kind of situation, shortage of the crude oil, so first thing that we can expect in a short run is that maybe we can diversify our oil supply right now it's only concentrated on the Middle East countries, but we can diversify to the other countries like Southeast nations and United countries, and also even Canada, or even Russia as well. So by diversifying those kind of oil supplies, we can avoid this kind of a shortcut. But in the long run, we can actually reduce the fossil fuel usage itself. So by reducing, right now we are heavily depending on our fossil fuels. Almost 98% is depending on the foreign countries. But by switching this kind of foreign fossil fuels to renewable or nuclear power plants, then we can reduce those kind of heavy dependency on the foreign countries. And also, our government also have a plan to increase our carbon-free power plants to up to the 7% of our total energy usage.
Right, and speaking about that, Professor Yu, as you just proposed, President Lee Ji-hoon, speaking to his cabinet earlier this week, spoke about the importance of reducing South Korea's reliance on fossil fuels and turning towards renewable energy. That being said, what do you believe are the priorities that we must consider as we try to shift our focus to renewable energy?
Right. Well, like some years ago, I was also very skeptical about having renewable energy as the main sources of the like powering the electricity. But nowadays, I've already changed my mind that having a renewable is not just for the environment, but also can be works as the energy security. So, but right now, the centralized power plants has been a very easy one-point target for many, for like a missile attack and drone attack. But if we switch to the renewable plants, then you know, just like a solar panels and windmills, it's all of it. It's kind of a inexpensive compared to the central power plant. So even if we get attacked like using a missile or drone attack, I think having a renewable can provide us more cost-efficient way of protecting those kind of energy sources.
Right, for sure. And of course, building our energy supply resilience then.
Yeah.
All right, Professor Yu, I'm afraid that's all the time we have. Thank you so much for your insights today, Professor. And Ji-hoon, thank you very much for your time and your thoughts.
Thank you very much.
Right, that ends this edition of Press Perspective. We return same time tomorrow for a panel session on BTS's World Tour that begins Thursday night here in South Korea.